retired or soon to be retired? Do you want to make sure your investments continually outgrow your expenses throughout all your retirement years? Do you have questions about your health, your fitness, professional money management, Social Security benefits, or how to give to those you love without giving up control over your estate? Welcome to Financial Freedom with Paul Taylor, a show about living the best years of your life your way. Now, here is your host of Financial Freedom, Paul Taylor.
Well, good morning, Charlotte. This is Paul Taylor, CEO of Capital Advisor Group. Give us a call this morning. We're actually live. I have no idea what I'm doing in the booth this morning, but unfortunately we're here, and I've got a special guest that has volunteered to be part of my program today, and I know he's going to be pretty sleepy himself. We got a very special show today. If you are a business owner, if you're a highly compensated, if you're a 1099 employee, and you want to know what to do about this fiscal cliff, which I'm going to talk about in just a minute, how to avoid a huge tax burden that could occur next year, how to take advantage of few tax laws before the year ends. We have the exact same situation we had in the House. We're going to have a stalemate, and I believe the fiscal cliff will occur, and this is going to be devastating to our economy, devastating to your pocket. So stay tuned, and we'll talk about that a little bit more. But you are listening to the Financial Freedom Show, where knowledge is wealth. If you'd like to give us a call, you can call us live once again this morning at 704-570-9610. Also, if you'd like to talk to us anytime during the week, you can reach my office at 704-947-6985, and we'll be talking about some mini classes and playing a commercial telling you about some mini classes that will be educating you, and that number is 800-551-5086. Well, let's talk about the markets for the week first. The Dow, even with a little bit of a gain on Friday, still ended down 2.1%. The S&P 500 had its worst week since June and dropped 2.4% for the week. And if you remember when we talked a couple of weeks on our show, the S&P 500 was flat for the year just in June, so we've had a heck of a run since then. And the NASDAQ was also down with 2.6% down. So before we get Raul Garut on the phone with me and on the line, I want to talk to you a little bit about what the fiscal cliff is. The fiscal cliff, in December 2010, President Obama signed the Tax Relief Unemployment Insurance Reauthorization and Job Creation Act of 2010, extending the 2012 provisions of the Economic Growth and Tax Relief Reconciliation. Boy, that's a bunch of words. Basically what it is, here's what's going to happen. If nothing is done, it will modify the tax cuts by the year's end. Millions of Americans will see their tax burdens rise significantly. Workers will lose out on payroll tax holiday. Doctors treating Medicare patients will take a 27% pay cut. Middle-class taxpayers will force an alternative minimum tax meant for the rich. And automatic federal spending cuts will kick in, eliminating unemployment benefits and social programs for the out of work. So there's going to be a lot going on, and if you are invested in the market, I would tell you to stay tuned because a lot of experts are expecting a tremendous drop first quarter. Even if you're not invested in the market, but you're wondering how you can take advantage beyond what you've been told on tax strategies that can help you reduce your overall tax burden. So with that being said, I want to say good morning, Raul.
Good morning. Good morning, Paul. How are you?
I'm fine. Where are you today?
This morning I'm in Cleveland, Ohio.
Oh, you're home.
I have been, yes, I have been actually in 6 different cities in the last 10 days.
That's what I thought. Every time I talk to you, you're somewhere else.
Yes, sir.
Raul, tell the listeners real quick a little bit about your background, and then I want to jump right in on this fiscal cliff and how we can take advantage of it.
Thank you very much, Paul. I came from India almost 50 years ago with $7 and a scholarship to the University of Colorado. And I realized in 1976 I was in 70% tax bracket. And, my wife is a physician, and I was an engineer. I realized that it doesn't make any sense to pay that kind of tax. So very soon I just shifted gears and I wanted to become a tax attorney, actually. The tax code, Paul, has 70,000 pages right now. It is one of the most complex tax codes I have ever seen in the world. And there are so many details in the tax code that the average person is really confused. But I call this a window of opportunity right now. If you do something before the end of the year, you can significantly cut your taxes. And after 30 years of experience and working with hundreds of business owners, I came to the realization that the average businessman is too busy. And they really need somebody like you to help them and cut taxes. You can cut taxes significantly right now, and most people can put as little as $5,000 or as much as $1 million and put money away for themselves and let it grow tax-free, and eventually let it grow tax-free and withdraw it tax-free also if they know how to plan properly. Well, I sincerely hope that your listeners will take advantage of this opportunity.
Let's talk about that a little bit, because there's a couple things that you said just in the short segment that you've been speaking. First of all, you were in a 70% tax bracket. If we keep heading in the direction we're headed in, there will be another 70% tax bracket. So folks need to do some planning for that.
Excuse me. That's correct. That's correct. You see, there's a Wall Street Journal article that many of your listeners can get a copy of, and it says that the headlines are, "Get ready for a 70% tax." You know, right now, at the end of this year, the highest tax bracket of 35% is gone forever, and it's going to be replaced by 39.6%. And on top of that, all your business clients or self-employed people will have to pay 15.3% for FICA taxes and Medicare taxes. The 15.3% plus the 2.9% Medicare tax is going up to 3.8%. And there's a host of taxes that are coming in after January 1st. So you would never, ever see this low tax bracket for the rest of your life. So if you are able to convert your IRA to Roth IRA and get rid of those taxes forever, I think this is the best time to do that. And unfortunately, there's not a lot of time left. But there is enough time now for those of your listeners who want to really take advantage of it, and they really should call you.
Well, and that's exactly right. And one thing we talked about last year, we had somebody come along at the very end of the year, and that's one reason I wanted to do this show today, is because time is running out. But last year we helped a business owner put away $100,000 that he did not have to report under his taxes, who had a really good year last year and had numerous years that he's had like that, and was sick of paying taxes. And especially now with the higher tax bracket that's coming along, this particular case that we worked on, Raul, we were able to defer for that year. Now, he was more interested in deferral, but we were able to defer where he did not have to report any taxes, or not. He had to report some, but we were able to defer $100,000 just in that particular case.
Right. That's a classic case. I had a client that really wanted to put some money away, and he was procrastinating. He was 40 years old. He could have put $100,000. He said he's trying to decide if he should wait one more year or just to pay the tax on that right now and spend the money for whatever purpose. So I told him that there is a concept called lost opportunity cost. If you had put that $100,000 in, by the time, he's expected to live to age 90, that's 50 years of tax deferral. And with the guaranteed products that are available right now, that $100,000 would have become $1.6 million when during his lifetime, that he could withdraw and enjoy that money and not really be worried about what's going to happen to the economy. And that $1.6 million is a lost opportunity cost. So every dollar that you defer now could multiply exponentially and make a huge difference in your retirement. Your listeners really should take advantage of that right now, no matter how young they are or how old they are. For a 25-year-old that just started working, if they can defer even a small amount of money in an IRA or even a non-deductible IRA, that money is going to grow tax-free for the rest of their life if they do a Roth conversion.
Absolutely. And folks, what the Roth conversion is where you just take your current IRA. Right now there is a law that passed a few years back where you can convert as much of your IRA, as long as you're willing to pay the taxes, into a Roth IRA so that it will grow tax-free, and you'll be able to withdraw from that tax-free. So, and the difference between tax deferral and tax free is substantial over time. Just like Raul, what you were saying, the gentleman who with the loss opportunity cost, I think you said he was 40 years old. If you put $100,000 back, that was $1.6 million that he would be able to have tax free at his demise. Is that correct?
That's exactly right. It's, by the way, it's guaranteed 1.6, not projected in the stock market. We are blessed to have some products right now that are giving long-term guarantees. The 10-year government bond has gone down to 1.5%. If you can lock in your money for 10 full years, you're lucky to get 1.5%. And that is crazy. We can do so much better in the market with guarantees offered by top-notch insurance companies. And I don't know why the people really are not taking advantage of that.
I think probably, and we'll talk about this. I did a show a couple of weeks ago, Raul, that was called Annuities, the Good, the Bad, and the Ugly. And the insurance companies, people hear insurance, they hear annuity. A lot of times they run from that. But what you're talking about is guarantees in the market, and or not in the market, but that you have returns that are tied to the indices of the market, but you have absolute guarantee and can't lose your principal. And that's very important in this time because, if you go back to 2000, Raul, nobody's made a dime. The S&P 500's up probably, I think I calculated the other day, it was only up about 6% over the last 12 years.
That's right. That 6% actually guarantees a double. And if you had left your money in the market, you barely broke even if you're lucky enough to leave it there and have the courage and the stomach to withstand the losses.
Well, let's talk about that a little bit more when we come back, because what I want to talk about is lost opportunity and also how to make money in the sideways moving market and also how to take advantage of the current tax laws. There's a few other tax laws we're going to be discussing. Folks, if you're just tuning in, you're listening to the Financial Freedom Show with your host, Paul Taylor, and guest, Raul Garuda. We'll be right back after this message.
This is Paul Taylor, president and co-founder of Capital Advisor Group. I have put together a simplified 1-hour event for the layman investor and retiree for free. Call Capital Advisor Group at 704-947-6985. Call now. Seating is limited.
You're listening to Financial Freedom, a show about living the best years of your life your way. Now, here's your host, Paul Taylor.
And welcome back and good morning. We are live this morning. If you want to give us a call, 704-570-9610. If you're just tuning in, we've been talking about the fiscal cliff and the effect it's going to have on your economic pocketbook and exactly how you can take advantage of some of the tax laws prior to the end of the year. We have a very special guest this morning, Raul Garuda. Raul, you with me?
Yes, I am.
Good morning. Good morning. I really appreciate you getting up so early this morning. And I should also say to my producer, Tony, who was out till 1 o'clock last night, thank you for coming in this morning. So we are live. Folks, if you would like to come in or like to call in, please do. Once again, the number here is 704-570-9610. If you have any questions, would like to discuss anything, we will be glad to take that call. Also, Raul, I do a mini class, which are where I teach folks different strategies, just give them some knowledge, because I believe knowledge is wealth is our tagline. And folks, if you want to be part of that class, you can reach us at 1-800-551-5086. I've got them throughout the Charlotte region and up in the Lake Norman area. Once again, 1-800-551-5086. With that being said, I feel like I've given you enough lottery numbers to do whatever you need to. But, folks, once again, what the fiscal cliff is there's going to be a tremendous change January 1st. And we've got a lame duck Congress and House again that I don't think is going to pass anything. And if nothing is passed, what you're going to see is the Bush tax cuts that have been in place for a number of years now will go away. And when that happens, there's going to be an alternative minimum tax, which if you make a large amount of money, you'll know what that means. That means you can only take a certain amount of deductions, and the government comes back and taxes you again. That used to be a tax designed only for the very wealthy. That is going to start hitting the middle class. Also, your tax brackets. I don't care whether you're barely making anything or if you're making a whole lot, everybody's tax brackets will be going up substantially. And also the estate tax, which we're going to talk about at the last segment of this show today, which is very important, folks. There is a loophole right now in the tax code that will allow you to pass an enormous amount while you're living and still have control while you're doing that. We're going to talk about that some more. But what I want to talk a little bit more right now, Raul, is how somebody can take advantage who has been doing very well. They're all they know is what you call the $40,000 rule. That's a maximum they're able to put back, or in some cases it's even less than that. How is it that these strategies that we've been talking about, what other options do people have besides that?
The tax code, Paul, gives you an opportunity to cut your taxes a great deal. There is a plan called Defined Benefit Plan. A defined benefit plan is exactly what it says. In olden days, when you worked for a company and when you retired, they would give you X number of dollars, when you reach 65. The tax code says that you can have a plan to give yourself a $200,000 plan, $200,000 a year when you retire at age 65. You can also have $200,000 when you pass away for your spouse. So that's called a joint and survivor retirement plan. So in order to accumulate that kind of money, you can accumulate as much as $2.3 million. And that would justify a contribution that can range anywhere from $50,000 to maybe $200,000. And for those of your clients that are really blessed to have more income, the benefit can be even more. So you have the ability to go way beyond the $40,000 to $400,000 or more if they would like to cut their taxes. And that is really the advantage of taking care of yourself and taking care of your retirement. Also, many of your clients right now have a 401k plan, where you put some money and your employer puts some money. You can put another plan on top of that. It's called 401h, as in Henry, and that is called a rich man's Roth, actually. The federal government realized that they have not done a good job of taking care of people, if they need nursing home care. So when you put money in on top of your 401k with this provision, it's tax deductible. And if you need money for long-term care or health care, it is tax-free when it comes out. So people should be asking those questions, and they should come to you and take a look at the choices that they have to really make a huge difference, reduce taxes, because the tax code does give you a lot of opportunities to cut your taxes legally, but you have to be proactive. You made a statement that knowledge is power. Well, actually, applied knowledge is power. Applied knowledge is wealth simply because you can take that knowledge and really benefit yourself. If you're not going to do something, then all the knowledge is of no use. You're doing a great show today and making a huge difference and helping a lot of people. But it's up to them. They have to take the first step and call you and take care of themselves. So applied knowledge is the key.
That is a great. I should change my tagline to that. Applied knowledge is power. Because you can have all the knowledge in the world, but if you don't do anything about it, your situation is not going to change. So now, Raul, so let's just kind of break it down. If I'm a business owner out there and I make $300,000 a year, and in the past I've been forced to be in a 30% tax bracket, when you add the state in, you're more like 38. You're telling me that basically I can defer much more of my overall income where I have to pay minimal taxes.
That's right. If you tell me that you can get by within $100,000, you can put away $200,000 and let it grow, and you're not escaping taxation, you're deferring taxation. If you can put Uncle Sam on hold for some time and let it grow tax-free on a compounding basis, Uncle Sam still is going to get his share, but you will have a lot more money to work with, and a lot more that you can decide and withdraw that money, when you get older. You see, the biggest risk, Paul, right now, everybody is concerned about living too long and running out of money. So you're in the business of solving the problems of living too long or getting sick or running out of money. And the federal government has said, listen, if you discipline yourself and take care of yourself, we'll help you. We'll give you a break. We'll give you an opportunity to make a difference and take care of yourself, by putting money away. But you have to have the discipline and take the time to see financial planners like you, who are so proactive and can cut the taxes now. Because if you wait till the end of the year, it's over. It's either use it or lose it. And most people realize after April 15th or by April 15th that, hey, I want to do something, but it's too late. You can't do anything. They have to see you now. Time is of essence right now. They have to make a move before the end of the year, pick up the phone and call you right now and ask you for help.
Yeah, because time is definitely running out, and it's not because of us. It's because of, once again, the fiscal cliff that is occurring. And, Rao, you mentioned something earlier that the tax code has 700,000 pages.
Yes,
and
70,000 pages.
70,000 pages, I'm sorry. Uh-huh. And, I'm throwing numbers out like billion and trillion like the politicians do. Sorry about that.
That's okay.
But I don't know that tax code. And so, folks, I want to let you know right now that I have chosen to work with Rao, and he actually helps us with some of the more complex cases because of his knowledge. Once again, if you are just joining the show, he originally was going to be a tax attorney and has become very knowledgeable in taxes and has become very knowledgeable on how to take the extreme most advantage of not only avoiding taxes legally, but also even not only deferring them, but also even getting a tax-free at retirement. There's a number of different strategies. Everybody's situation is different, correct, Rao?
Yes. Paul, there's a fact of life. The country has spoken, and the elections basically are giving out a huge message. The message is very simple. Taxes are going up. Get rid of them as much as you can right now. If you can convert your IRA to Roth IRA, and Paul, you can convert 30% of anybody's IRA to Roth IRA with no taxes, with the techniques that you have right now. There are a number of companies that are going to pay the tax if you are willing to cut some taxes right now. They have these so-called bonus products. The bonus will more than offset the tax, and you can make it up in less than 2 years and enjoy tax-free withdrawals from your IRA to Roth IRA for the rest of your life and pass it on to your children and grandchildren. One of the biggest and greatest gifts that the tax code has given you is really what is known as a multi-generation Roth IRA. You can not only get tax-free money, but you can pass it on to your children and grandchildren, and literally for 2 generations you can enjoy this IRA if you just do some planning. But it's not going to happen automatically. You could end up losing all of your IRA because the IRA money, without planning, is subject to income tax and estate tax. And you were alluding to the $10.24 million, exemption this year. So for those of your clients that are blessed to have a lot of assets, if they don't do some planning, that $10.24 million exemption is going to go back to $1 million. So it's a huge difference. That could make a difference of 50% tax on $9 million.
Well, and those are some big numbers we're talking about, but folks, that is a 50% tax bracket, and if that goes to $1 million, that includes everything: your cars, your houses, it doesn't just include your investments. That's going to include everything, and we're going to spend a lot of time on that on our last segment. But right now, we've got to go. Unfortunately, got to go to a break, Rao. But listen, you are listening to the Financial Freedom Show, where knowledge is power only if you execute it. Give us a call. 704-570-9610, or if you'd like to have a mini seminar and attend that where you can get more information, you can call us at 800-551-5086. You're listening to the Financial Freedom Show. We'll be right back.
Told myself that you were right for me, but felt so lonely in your company. But that was love and tonight I still remember.
This is Paul Taylor, president and co-founder of Capital Advisor Group. I have put together a simplified 1-hour event for the layman investor and retiree for free. Call Capital Advisor Group at 704-947-6985. Call now. Seating is limited.
Welcome back to Financial Freedom, a show about living the best years of your life your way. Here's your host, Paul Taylor.
And welcome back to the Financial Freedom Show, where knowledge is wealth. And we've got a very special guest today, Raul Garuda. Raul, once again, thank you so much for getting up so early with us.
Oh, you're welcome.
And Tony, our producer, thank you for getting up. And by the way, I'm laughing at these commercials he's playing. I've learned more about the force than I've ever wanted to know this morning. But we're learning about some major stuff. We've been talking about deferred compensation plans and defined benefit plans, and we've been talking about why you might want to look at and consider a Roth conversion. I want to bring something back up that you said right before we left for break, Raul, and you said that you can take 30% of your IRA right now into a Roth, or you can convert your IRA into a Roth and save 30% on taxes. I believe is exactly how you put it.
That's right. That's right. That's exactly right.
And
you can convert 30% or 1/3 almost of your IRA to Roth IRA, and we'll show you how to pay the tax without reducing the capital.
Yeah, exactly, and that's the biggest thing, without reducing the capital. Matter of fact, Raul, I actually worked with a gentleman over a 10-year period. We put back $1 million of his IRA. We converted into a Roth IRA, and he paid $0 in taxes during that time due to some other strategies.
Exactly. A lot of people don't know that you can do that. The reason why 90% of all the people that should be converting to Roth IRA are not converting because they don't know how to pay the tax. But you can show that very nicely with guaranteed products that you market right now, Paul.
Correct.
And that is the message that a lot of people have to get to, and they're not able to follow up on that. They just don't know, and they don't like the idea of paying taxes. But if you don't pay the taxes now, or find a way to cover those taxes, then you'll have to pay taxes on this money forever.
Correct. And we can almost guarantee that. I mean, like you said earlier, the people have spoken, and taxes are going to be going up.
They're going up. Taxes are going up. There is no way around it. So what you have to do is you can ignore it, or you can plan for it, or you can transfer that risk to somebody else. Of all the risks, the longevity risk is a big risk, but the tax risk is something that you cannot even predict. And if you look at the budget, and if you look at our debt of $16 trillion, luckily, right now, the interest rates are close to zero.
Correct. So interest rates are close to zero, and we're at $16 trillion. How does that affect the average investor out there who's trying to avoid taxes?
Well, interest rates cannot stay zero forever. When you add interest to the debt, interest on the debt, and when you have to pay it, see, the total income of all the tax revenues from the United States government is $2.2 trillion. We are spending $4 trillion. So how long can you spend twice as much as your income?
Correct.
There's only one way you can balance it. One is to increase taxes significantly, and the other one is to reduce expenses, reduce spending. Spending also can mean benefits. So if your taxes are going up and if your benefits are going down, where else can you go except plan properly and eliminate the issue of taxes going up forever? Get rid of those taxes and eliminate the ambiguity for the rest of your life, and make sure that you can at least control, one aspect of your retirement planning, which is taxes.
Exactly. And Raul, I really think we've got kind of a perfect storm here.
Yes.
Because there is overspending twice as much, and especially with the new plans that are definitely going to be coming in effect over the next 4 years, and interest rates being at the all-time low, basically zero, and then you've got taxes are going to have to go up. The tax brackets, the tax on not only the middle class, but really across the board. They always talk about being a tax on just the wealthy, but it's going to hit the middle class. It's going to hit all of us. And folks, what we're talking about today is you really have got to do some planning, and you can't just put your head in the sand and hope that everything's going to work out. And we are actually live today. If you'd like to give us a call, 704-570-9610. If not, if you'd just like to get more information about what we're talking about, because I know we're doing a what I call a bird eyes overview of everything, a very high overview of what we're talking about. If you'd like to get more detail, you can reach me at, we got live operators at 800-551-5086. I'm going to slow that down, 800-551-5086, or you can reach us at our office anytime during the week, which is 704-947-6985. Now, Raul, you're talking a lot of tax codes here and a lot of tax strategies.
Yes, sir.
We've talked about the defined benefit plan. Now, that's going to just be deferring taxes for the future. That's taking advantage of the low taxes today and taking advantage of the money growing that normally you would have been paying to Uncle Sam.
Right.
If you're driving in the car and you're just tuning in, what we were talking about is if a person's making $400,000 and they're $400,000 and they can live off $100,000, literally they could defer $300,000 a year, and not have to pay taxes on that. But the reason they're doing this, Raul, is because people have never been taught.
Yes.
And what I don't understand is why they're not being taught, why people aren't speaking like this.
This is really a very specialized area. Just as you have a lot of doctors with a great number of specialties, there are cardiovascular surgeons, there are cardiologists, there are general practitioners, there are chiropractors. And majority of the people, stop at the lowest level. They don't really ask deep questions. And unless they go to somebody like you, Paul, that is very, very conscientious and that really is client-oriented and wants to make a difference, and learn as much as they can, they just are losing the opportunity to take care of themselves. And that's the reason why we have also started doing a lot of seminars for CPAs by themselves. The CPAs are very good people, but they're too busy. They have so many tax forms they have to file, and unfortunately they don't have the time to spend and learn and specialize in these areas. That is the reason why I'm suggesting to all your listeners to come and talk to you so you can really link them up with a specialist nationally and really do some really nice planning so they can make a huge difference.
Absolutely. And we see, if you are a CPA and you're listening this morning, we do work with CPAs and we do help get you up to snuff and knowledgeable in these areas that we've been talking about, because it is a specialized area. And Raul, I really don't know how, we talk about a lot of different investments on this show and a lot of different strategies.
Yes.
And I really don't know how anybody can talk about money without talking about taxes. I mean, the two are hand in hand. And if I've met with, hundreds of people, we oversee a large, massive book of business, but when I've sat down with people and they've had their current advisor and he's never looked at their taxes, never talked to them about Roth conversions, never talked to them about tax-free. It baffles me that anybody can give advice without bringing that all into one house, one area.
Paul, I tell people that it's really not how much you make. It's all about how much you keep. France and Spain have just enacted new tax laws, and they have added value-added tax. On top of all of the taxes, a value-added tax of as much as a 20% flat tax on top of everything. And in France, the elections were recently over, and if your listeners, really paid attention, the maximum tax bracket bumped up to 75%. Okay?
Wow.
So really, it is horrendous. You have to really focus on keeping what you make. Otherwise, you're just wasting your energy and you just give up.
Well, and Raul, you were talking earlier in the show, when you first came to the United States, you were, your wife was a doctor and she was in a 70% tax bracket. So, folks, if you're listening, you're like, there's no way that's ever going to happen. You need to wake up, because it has happened. It's happening throughout the world. It's happening in France already. It's happening in Spain. It is happening. It's going to happen here, because you can't keep spending the amount of money that our government's spending without getting some type of tax. And, Raul, that, I'm getting older in my age. Obviously I'm getting a lot older, but that wasn't that long ago. That was
it's not that long ago at all. And I travel a great deal, Paul. I go to India twice a year, and sometimes I go through Europe. Sometimes I come back through Hong Kong and Bangkok through the Orient. But all over the world, it's very, very simple. The reason why people wanted to come to the United States was for the privilege of starting great companies, and all the entrepreneurs really came to the United States and started businesses.
Mm-hmm.
But if our tax code keeps getting worse and worse, and tax rates keep going up and up, there is no incentive for many businesses to start here. In fact, right now the corporations that are overseas have so much money that is stuck there. There is no incentive for them to bring it back. If they bring their profits back, they have to pay 40% tax. There are many countries where they can pay a whole lot less. Hong Kong had a flat tax of 17% for a long, long time. 17%, and they balance the budget very nicely. Okay, if you go to some other countries, the tax rates are really much less than that. And so why would somebody do business in the United States and pay 40% tax, plus many other taxes and many other regulations, compared to many other countries which have a lot less tax? So when you take away the incentive to keep what you make, you just destroy the opportunity to be innovative. And the money that can be spent in research and development and come up with great new products, that money is the one that's going to suffer right now. The greatest thing that the United States had is really the innovation. You take a look at Apple. The products they're coming up with. This is phenomenal. This can turn around the economy in a big way, provided the taxes are kept at a low bracket.
Mm-hmm. And once again, I agree 100%, Raul, that the brackets are going to keep going up, and and people have got to take, folks, if you're just tuning in, you've got to take advantage of this knowledge that we're giving you, and you can by giving us a call. If you'd like to meet with us, or even if you just want to go to one of our little mini classes and learn a little bit more, give us a call at 800-551-5086. We'll be right back, Raul. We've got one more break, but when we come back, folks, we're going to talk about the biggest tax that you probably have never heard about.
You're listening to Financial Freedom, a show about living the best years of your life your way. Now, here's your host, Paul Taylor.
And welcome back to the Financial Freedom Show, where we have changed our tagline to where applied knowledge is wealth. And Raul Garuda is our guest today, and Raul is the one who came up with that, because we've always said knowledge is wealth. But if you don't apply it, folks, it is going to do nothing for you. Raul, we actually have a caller that's called in this morning, so let's see if he's got a quick question. Okay. Don, you there?
Good morning, sir. How are you doing?
Good morning, Don. I'm doing fine. How about you?
Great, thanks. I appreciate both of you being on, and I've been out of town a lot, so I haven't been able to really follow through with this, but I just want to ask a couple of little questions. I have about $80,000 in the bank just sitting there. I have about another 50 in just a regular not a Roth, but just a regular IRA. Now, that money that I've got sitting in savings, which, of course, is being eaten up every day,
yes.
Can that be converted into a Roth as a separate item, or can I combine all those into one?
No, you don't combine an IRA with a non-IRA, but what you can do is this. First and foremost, that $50,000 that you have in your IRA, Don, how old are you?
I am 67.
You're 67, perfect. What you should do is convert that $50,000 to a Roth IRA immediately, and we'll show you how to pay the tax on that conversion with the bonuses that you have, and recover all the taxes in 2 more years. And for the rest of your life, it becomes a Roth IRA. And you know what, Don? You can also leave it to your children and grandchildren if you want, and they can withdraw this money tax-free for 2 generations.
Oh, okay, great.
So that is the first thing that I would do, and you should really call up this toll-free number that Paul has, make up an appointment, and we'll show you how to get a better interest on your savings in the bank as well as a Roth IRA.
Okay.
And you have to do that before the end of the year.
Yeah, I'm aware of the disaster that's heading for what we have left.
Unfortunately, that's really what's happening, and You have to take. You're in charge. You have to take the first step.
Okay. Well, great. Well, Paul, I will be giving you a buzz, and I have your numbers here. And
fantastic. In fact, if you want to just give it to Tony, my producer, I'll talk with you maybe after the show, because everybody's situation is different, and we might be able to help you with that interest you're earning in the bank. We might not. It really depends what your goals and objectives are. But we do have some things that we can help you with. We appreciate you calling in this morning.
Okay, great. Thanks.
So, Raul, one thing that you were talking about a little bit earlier is guarantees, and how can you have a guarantee that's going to pay any more than 0.5% in this market?
Well, you see, there's a book that would love to send to some of your listeners. It's called Paychecks and Paychecks. There is a thing called mortality credits. Mortality credits are those that have the added advantage of the age as well as the interest rates. When you combine the two, we're able to get much better guarantees compared to any other investment. Also, you have products, Paul, that allow you to invest in the market. These are the index products, and of course the index products have done very well in the long run because they have outperformed with less costs and expenses. And you can really capture some of the upside potential and completely eliminate the downside risk.
Mm-hmm.
When you have those products, then you can really, in the long run, I believe that interest rates are going to be low for a long, long time,
mm-hmm.
and the markets probably would outperform that. And if that is the case, and there are no guarantees, of course, in the markets, but you can convert that into a guaranteed product and guaranteed paycheck for the rest of your life, and index that paycheck to inflation. And those are the products that are available right now that most people have no idea that they are available. And I hope that your listeners will take advantage of that and call you up to look into that.
Great point. And we do that, and we do help a lot of people with that. And, Raul, it took me a long time because I was so much of nothing but a risk equity investor, because that's what I've did all my life. But I actually took my own SEP IRA about 3 years ago and put it in one of those products that does have the guarantee. So I do have a guaranteed pension. And, the one thing I see a lot of people that's occurring right now is a lot of people are getting fat and happy with what's been going on the last 4 months. And obviously they gave up 2.5% just in the last week. But, usually when people are getting fat and happy is usually when something big's fixing to change. And, they got fat and happy in 2007. They got fat and happy in 2000. Of course, you had a 2000, 2001, 2002 downturn. You had the 2008 downturn where people lost 37% to 45% of their portfolios. And, Raul, when you lose 50% of a portfolio, if you're at 100,000, you lose 50%, you're now at 50,000. And if you have a great market the next year and it's up 50%, folks, you still have only $75,000. You are negative 25, even though the market went down 50 and came up 50. A lot of people think that's going to be zero, but it's not. It's a negative 25. So we've got some ideas. We've got some suggestions that we can help you with. You would need to give us a call. You can call my office during the week, no problem, 704-947-6985. Now, Raul, what we were talking about earlier is one of the biggest taxes nobody even really knows about because it doesn't happen until they die.
That's right.
And it used to only be $1 million. Actually, it used to be $600,000 when I first got in the business.
That's right.
If you had over $600,000, you get a tax. Not you, but your beneficiaries get a tax at 50% of your estate.
Right.
So, so if let's just make the numbers. If you're $1.2 million estate, then $200,000, you would owe $100,000 in taxes.
That's right.
So, and what most people think, well, I don't have $1 million. Well, you got to start adding it up. You start adding up your house,
yes.
your cars. They're going to take your personal property. They're going to take all your investments, your IRAs, everything. And a lot of people aren't aware of IRAs, but the biggest thing that most people aren't aware of is the life insurance. If your life insurance is in the estate, and people are like, well, life insurance is tax-free. It is tax-free, but if you don't have it set up right, it is not estate tax-free and comes back in the estate for tax purposes.
That's right.
Raul, right now we have a loophole, the biggest loophole I've ever seen. In fact, I'm shocked that it even somehow got in there. But you can pass on almost over $10 million to your beneficiaries.
That's right.
Tax-free. But Raul, if I had $10 million and I was wanting to pass that on, obviously I wouldn't want to gift it to my kids and lose control.
Mm-hmm.
That would be the biggest concern. But then on the other hand, I'm over here saying, well, I don't want to have to pay this 50% tax.
Yes.
Isn't there a way we can get around all that?
Yes. There's a nice way of planning for it. It is called trust. There are a number of different types of tools in the estate and tax planning. These are different types of trusts that allow you to transfer the assets and still control the asset for the rest of your life, and in fact control it even after you pass away, in such a way that you can put in family values, built-in family values to that trust document, so that your children cannot misuse it or abuse it. If you do the planning properly, and it has to be done, by the way, before the end of the year, you can actually escape complete estate taxes, or we also call them death taxes, on $10.24 million. And I can pretty much guarantee that you'll never ever see this kind of an exemption.
I agree with that.
It is once in a blue moon you have it, and if you don't use it, you lose it for sure.
Yes. I mean, and folks, I know we're at the end of the year here, but this is it. That is definitely, you can mark my words, will go away January 1st. I mean, once again, the people have spoken, and the wealthy are going to get taxed. And if that goes back to $1 million, here in Charlotte, a lot of houses are worth, $400,000 or $500,000, and you can get a 401k in there. It's real easy to get over $1 million, Ralph.
That's right. That's exactly right. One more thing with all of the business clients, if you have a business that you started a long time ago and it has grown, the value of that business is overlooked. When you add up the value of everything that you own, your home, your assets, your IRAs, your pension plans, and the value of your business, it can easily get to a very high point where you lose half of that. Mm-hmm. Most businesses completely go bankrupt because the children do not have the money to pay the taxes on those businesses. You cannot create 50% cash immediately when you have a business that's worth many $1 million.
Correct.
And because you don't have the cash, the Internal Revenue Service basically would auction off the property, and almost all the money that comes in is totally gone, to pay the taxes. And there are lots of cases like that. Wayne Huizenga, basically lost his entire Miami Dolphins team because of that.
Correct. And a lot of people don't realize that. And, Raul, that was happening a lot where I grew up in Amarillo, Texas, where farmers were losing their entire farm, mm-hmm. and I didn't understand what was going on. They were very rich with land, but very poor in cash because they just kept buying land and increasing their land populace. But
this is a classic case right now with lots and lots of people that own real estate.
Mm-hmm.
It's not liquid. They're not able to sell the real estate. They cannot raise cash.
Correct.
And as a result, they lose everything.
And because the IRS wants their money within 9 months.
Yes.
9 months of death, you've got an estate tax that must be paid.
Yes.
Well, folks, we've been talking about a number of things here. If you just happen to be turning us on, this live show can actually be, we put this on a recording on our website at www.capitaladv, like an advisor, group.com. That's capitaladvgroup.com. If it's a little too complex for you to be writing down and you're driving, you can tune into the radio stations. And we have a link, the Financial Freedom Show, that will take you straight to this recording. We will put that recording.
What's the toll-free number, Paul?
Yeah, the toll-free number, if you want to just give us a call for any of our mini classes or get some more information, is 1-800-551-5086. That's 1-800-551-5086. During the week, feel free to call our office, 704-947-6985. Once again, 704-947-6985. We've had probably, I think, one of the most valuable shows I've ever had since we've been doing this, Raul. My producer came in and said, this guy is very knowledgeable, but he knows how to speak. And I was like, that's exactly why I wanted him on here, because, Raul, you do come across very well spoken.
Thank you, sir.
And
thank you very much. For all your listeners, the one thing that I want to make sure they all pay attention is, seriously take a look at converting your IRA to Roth IRA right now. And then really focus on cutting taxes. They are going up. You just have to take the first step and be proactive.
Well, and that's exactly right, folks. And I like the new tagline you've given us, applied knowledge is wealth, not just knowledge. Ralph, thank you so much once again for getting up early this morning. I really enjoy working with you, and you have been a real asset to our firm, and wish you the best and wish everybody a great day. This is the Financial Freedom Show with your host, Paul Taylor.
You show the light.